Hey guys, welcome to another Damilola Forex Academy video. In this video, I'm going to be teaching about key reversal areas, how to find these key reversal areas, what factors these key reversal areas, and how to use the knowledge of these key reversal areas as one of our tools to be able to find high probability trades in the market. So I would advise you sit, you grab a pen, you grab a book, and write out every single thing I'm going to be talking about in this video. Let's go, guys. I would like to start by talking about what these key reversal areas are. It's important to note that key reversal areas are sensitive areas on the chart. They could be support levels, they could be resistance levels, or they could even be Fibonacci 61.8 levels. But these areas are very sensitive on the charts, and by the time prices get to this area, prices may not be able to go beyond that area, thus causing a break of the structure that took prices to that particular area. For example, if prices was on a bullish structure, let me go ahead and draw it out, and prices gets to a key reversal area like this, our price was on a bullish structure of higher highs and higher lows like this. We all know clearly that higher highs and higher lows indicates a bullish structure. By the time it hits a key reversal area like this, prices may not be able to go beyond this key reversal area, and it will cause a break of the bullish structure. Okay, so these key reversal areas are very important as they are the first elements that let us know when a trend is ending. So one of the first things we do when we open our charts is what? Identifying key reversal areas to let us know when a potential trend is ending, when a potential structure is going to end. Because the key reversal areas are the first elements that let us know that, okay, prices may not go beyond this level. Identify this level out, and prices might get to this level, and the structure that took prices to that level, prices might violate that structure. Okay, I did the example of a bullish structure. Right now I'm going to do an example of a bearish structure. Okay, for example, there's a strong support area right here, and price is making consecutive lower highs and lower lows. By the time prices hit that strong support area, prices might not be able to break it, and if price doesn't break it, it would what? It will cause a change of structure. So that is why these areas are very important, and they must be identified on the chart, because like I said, they are the first elements that let us know that prices would or potentially break structure. Okay, they let us know that a bullish trend or a bearish trend could be ending at this strong area, and we should be preparing for a potential break of structure, which is going to give us a trade opportunity. Okay, so that is what key reversal areas are. What factors a key reversal area? It's important to note that one of the factors of a key reversal area is the horizontal support and resistance zone. Okay, so an horizontal support and resistance zone can act as a key reversal area. This is because when prices gets to a very strong area of resistance or a very strong area of support, prices might not be able to go beyond that area, and this will trigger a break of structure. For example, in this case, this is a strong resistance, for example, and we see prices keep making higher highs and higher lows like this. When prices gets to that level, a strong horizontal or resistance and support zone, it might not be able to break it, and that would send prices down, breaking the structure. Okay, so it's important that we take note of very strong horizontal support and resistance zones in the charts, and taking note of these areas is going to allow us to know where a particular trend might be ending, or where a particular trend might be starting. Okay, so it's important to take note of strong horizontal support and resistance levels on the chart. Okay, the next thing to take note of is the Fibonacci 61.8. Okay, so the Fibonacci 61.8 is also a very important level that could let us know where prices might be reversing. Okay, for example, if prices is on a bullish structure like this, push, exhaustion, push, exhaustion, push. By the time prices comes and make another exhaustion again, the Fibonacci 61.8 can let us know where the exhaustion is ending. That means that price will reject at the 61.8 level, and that could send prices back up. Okay, that is the 61.8 from this low to this high. Price could reject at that 61.8, and that could send prices back up. So the Fibonacci 61.8 is a very important level that should be watched out for and should be identified as a tool that could cause a reversal of prices. So it's important that whenever we are trading, we identify what key horizontal support and resistance zones. We also identify key Fibonacci levels. Okay, another tool that we use to find out what potential area of reversal of prices is the trend lines. Remember that the trend lines is a diagonal support and resistance tool. If prices keeps rejecting at a particular trend line support, or if prices keeps rejecting at a particular trend line resistance, then that could keep factoring a reversal of prices. For example, if we see a bullish trend line like this, and we see prices keep hovering around it, whenever prices comes back to that trend line, it could let us know that the bearish trend, that is the bearish trend from the high here that brought prices down to this low, might be ending at this trend line, and price would go back to the top. Okay, so these are the advantages of trend lines. They are also important levels they are important tools that could let us know levels where prices might get to and might not be able to break. Okay, so it's important that we use trend line as one of the tools in our arsenal in checking for a potential reversal of prices. Okay, overall, the one that covers all of these things I've talked about is chart structure. Okay, so chart structure is very important, as at the end of the day, chart structure could let us know when a trend is reversing. Okay, so chart structure is the king of all of this. We use chart structure with the horizontal support and resistance zone. We use chart structure with the 61.8 zone, and we use chart structure with the trend line. So chart structure is the king, and with the use of chart structures with all of these tools, you will be able to know where a trend might be reversing. And it's so simple. Okay, so the next thing I'm going to be talking about is the advantages of identifying key reversal areas. Okay, so advantages of identifying key reversal areas. Okay, so one of the advantages of identifying key reversal areas is that it allows us to know where a trend might be ending. It allows us know where a trend might be ending. It allows us to know this by showing us where is likely for prices not to be able to go beyond. Okay, so this allows us to know where a trend might be ending. It also allows us to know where a trend might be starting. It allows us know where a new trend might be starting. Okay, for example, if we see a strong resistance level here, and we see prices keep making the bullish structure to that level, as soon as price gets to that level and we've identified that strong resistance level, we know that there's always a potential that prices may not be able to go beyond that level, and this would, like I said, trigger a break of structure. So the knowledge of identifying this key value area has allowed us to know where a new trend might be starting, and also allowed us to know where a trend might be ending. Okay, so the key reversal areas are very important, and we should identify them on the charts as they give us heads up. Like I said, they are the first element that allows us to know where a trend might be ending and where a trend might be starting, because they are the first elements that triggers a break of structure. Okay, if price is on higher highs and higher lows and they hit a strong resistance or strong support key reversal area, prices might not be able to go beyond that level, and that will trigger a break of structure. Okay, so key reversal areas are very important. They should be identified with what? The horizontal support and resistance tool, like we talked about, identified with the Fibonacci, identified with the trend lines, and overall we should use what? Our chart structure as an hand-in-hand tool with all of these other tools that I've mentioned to be able to get high accuracy when it comes to our reversal areas. So we're going to go on to the charts right now to see how we use what the knowledge of this key reversal area in our multi-time frame analysis. To be doing a multi-time frame analysis while emphasizing where the key value areas are around where prices are trading. Okay, so we are going to start by drawing the structures out of prices. Okay, so clearly overall we can see prices is on clear lower highs and lower lows. Okay, so we saw prices make what? Push, exhaustion here. This is a bigger fractal which we have to separate. Then price type with small fractals of what? Push, exhaustion right here. Price came to this level, made the push, made the exhaustion. Price came to this equal level again, made the push, made the exhaustion and equal level at this level before what? Coming to make a lower low here. So overall price is on clear lower highs and lower lows. And if you understand price action, you know that what? When you are trading against the trend, the highest you can be able to buy to or sell to against the trend is the 61.8, and that 61.8 becomes what? A key reversal area. So I'm going to bring up my Fibonacci from the high to the low, from the high point to the low point right here. Okay, so we can see prices trading at around 61.8. so 61.8 is a key reversal area, as in this case any buy opportunity, you know, like I said, we saw prices what? Make what? Push, exhaustion. Prices came again to this level, make push, exhaustion, came here for a lower low and double pressure here, you know, continued on bearish, clear bearish structures of lower highs and lower lows. Then at this point here, we know that what? Any buy opportunity at the break of structure of this high and this low, any buy opportunity, the maximum we can buy to is the 61.8, because what? We are trading against the trend. Price is on clear lower highs and lower lows, and price will keep making lower highs and lower lows until a break of structure happens. So that means that any buy opportunity that we are taking, the max is 61.8, and 61.8 is a key reversal area. And also at 61.8, what do? We are going to look for a break of the bullish structure that took price to 61.8, and what? We are going to sell down to 100.0 in the direction of trend here, because price is clearly making lower highs and lower lows, continuous lower highs and lower lows. So we have to what? Keep continuing that bearish trend of lower highs and lower lows, because that is the flow of the market, and any buy opportunity is just a retracement. And what? And if prices breaks structure at this key reversal area at 61.8, price would come down to this level here at 100.0 to continue its normal bearish direction of lower highs and lower lows, as we've been clearly seeing here. Lower highs, lower lows, as we've been seeing. So these are very important things to note. Okay, so the next thing to do is what? Go down to our weekly time frame. We've identified our key reversal area, so we're going to go down to our weekly time frame and see if what that key reversal area, like we said, has triggered a break of structure. Okay, so what is the structure of prices? The overall structure of prices is what? Push, exhaustion, and this one is a what? Is a big fractal. Then we can see prices start on smaller fractals of push, exhaustion, push. Okay, so what separates a big fractal from a small fractal? It is what? You bring your crosshair tool to measure the exhaustion. You can see the exhaustion of this one now from the peak to the trough is 632 pips, while the exhaustion of this from here to here is what? 387 pips, which means that this one here is a small fractal, while this one is a bigger fractal. And remember that we cannot go from a bigger fractal to a smaller fractal. We will have to separate those fractals. So this is what? Push, exhaustion. This is a separate fractal. Then price started making small fractals of what? Push, exhaustion. Prices hit this key reversal area, and this key reversal area factored a break of a structure. even though here we can see that what prices traded above the key reversal area, but we can see that prices eventually still came back and respected the key reversal area. That's why when prices made push exhaustion, prices made a push to that level, prices came and prices broke the bullish structure. Okay, so when prices broke the bullish structure, we know that what when price breaks a bullish structure in the direction of trend of the broken fractal, we are going to sell to 100.0. That is the rule. When prices breaks a structure and in the direction of trend, you sell or you buy to 100.0. That is the rule of price action. Okay, so now there's been a clear break of structure right here at the key reversal area. Push exhaustion, push, clear break of structure has happened here, and we know that eventually price is coming to this level. Okay, but usually when prices break structure, what does prices do? Prices goes back for a 61.8 retracement. That is quite normal. If you watch my videos on chart structure, whenever we see a break of structure like this, we naturally see what prices go back for a 61.8 retracement before coming back down. So we see that about 80% of the time, because it's not all the times that prices break structures and does a retest. Okay, so we're going to bring out our Fibonacci from the high to the low. Okay, so we can see that what price is doubling that area as a strong reversal area, because prices has gone there again to make a 61.8 retest. Okay, so that area has been doubled as a strong reversal area of prices. Okay, so clearly, like we said, we can see what a break of structure of this fractal, push, exhaustion, push, break of structure of this fractal, and within the fractal of our entry, this is our take profits. But instead of prices just going straight to our take profits, price just broke structure. So price decided to do a natural 61.8 retest before coming down to our take profit at this level. So now, by the time prices comes to this level and now breaks this level, prices has now broken the overall fractal. So that means that price has now broken the fractal from this low here to this high. So, but right now, within the fractal of our entry, within the structure that was broken, this is the structure that was broken from this low here to this high. This is the structure that was broken, and it was broken at the break of the higher low right here, which means that what price is going to come to 100.0 of the broken fractal. And at 100.0 of the broken fractal, if prices breaks, then price has broken into the next fractal, and that is going to send prices down to the ground level right here. But within our tradable area right now, we know that what a break of structure has happened, and the max we can go is the 100.0 of the broken structure or broken fractal right here. But before prices went to 100.0, prices did a natural 61.8 retest at this area. So this 61.8 has been recrowned again as another reversal area. So we can see how important 61.8 is in identifying key reversal areas. Okay, so now that we've identified it, what is our job? Our job now is to go down time frames and look for a break of the bullish structure. At the break of the bullish structure, we are going to sell to the 100.0 of the broken fractal as usual. But eventually, we know that what price would come here, as all of these bullish movements are just a retracement. Okay, so now we'll go on to the daily time frame. We'll go and see prices again trading, it got to that reversal area, and the reversal area is holding prices, and this reversal area is going to send prices down, as we know that clearly that what reversal areas are the first elements that triggers a break of structure. So let's go to the 4 hours and try to read the structures. Okay, so we're going to read the structures using our knowledge of fractals. So we can see prices make push exhaustion. This is a bigger fractal. Then price came again, made what push exhaustion. This is another big fractal. Then within the fractal right now, prices made what push exhaustion. Then prices made a big push here, made the exhaustion. Then prices made the push. Okay, so price made a push to this 61.8 area here. Like we said, this 61.8 area here is a potential reversal area of prices. Okay, so as soon as prices got there, we can see that that area has started, sending prices down. Okay, but what is our first element that the bulls are done and the bears are coming will be in is a break of a trend line. Okay, so it's important to note that the first thing we did was identify a key reversal area. That is the 61.8 level here. The next thing we did is bring our trend line. At a break of trend line, this is the second indication that, okay, firstly, we saw a key reversal area. and what we saw, what a break of the trend line. A break of trend line has allowed us to know that what that bullish trend is done, and the bears are in to take over prices. Okay, so the last element we're going to wait for is what? A break of the horizontal level here. This horizontal level here, you can see this horizontal level here. It's a strong horizontal level right here, and it is also the last higher low of prices. So you can see how we are using what? Chart structure with our knowledge of reversal areas. Okay, so this particular area right here is what is the last higher low. If we read the structures here of the fractals, is what? Push, exhaustion, prices made a push, prices came to this level for an exhaustion before prices made a push. Okay, so this area is the last higher low, which is what? Which should be identified as what? A key reversal area, because if prices breaks the last higher low, then what? Coming from a key reversal area, if prices breaks the last higher low, it has let us know that what? The bulls are done, and what? The key reversal area has triggered a reversal of prices. Okay, so the key reversal area has now worked with the trend lines, with the horizontal support and resistance zone, and the chart structure to send prices down to what? The 100.0 in our direction of trend. Okay, so like I said, the trend line is the first element that will let us know that what? That the bulls are done and the bears are in after prices breaks. And the next element that lets us know is what? Chart structure and this horizontal support and resistance level. By the time prices breaks below the chart structure, which is what? The last higher low, that means that what? Price is no more on higher highs and higher lows. Price has now had a lower low, letting us know that the bulls are done and the bears are finally in to take over prices. Okay, so by the time prices breaks, prices would have clearly been done with the bullish structure, and what we are going to sell now to the 100.0 of the broken fractal. Okay, we can see prices make what? Push, exhaustion, price came to this level, made push, exhaustion, and price came to a reversal area here. At the break of structure right here, we are going to be selling prices to the 100.0 of the broken fractal. Then by the time prices breaks, price has broken into what? This next fractal here, and what? Eventually we know that what? At the end of the day, price is coming to this level right here, 100.0 right here, and all of these bullish movements were only just a retracement. Okay, so in this case, what am I going to do? But as soon as I get my entry right here at the break of structure right here, I'm just going to set and forget prices to the ground right here, knowing fully well that at the end of the day, all of the bullish moves were only just a retracement, and eventually prices coming here. So as soon as I get my entry at the break of structure, I'm just going to leave prices to come down to this level, because at the end of the day, this was the overall structure. Push, exhaustion, prices made a push. Remember that what? All of these bullish moves were a retracement, and what? Prices broke the structure at this point. When prices broke the structure, prices just what? Did a 61.8 retracement, and prices coming to the ground level here at what? The 100.0 of the broken fractal. Okay, so in this type of case, we came to the 4-hour to find our entry, and we said what? Okay, we saw the structure, you know, like this. We saw prices make what? Push, exhaustion of big fractal here. We saw prices come again and make another push and exhaustion of a smaller fractal, which has to be separated, because you cannot go from a small to a big fractal. You cannot go from a big to a small fractal. That those has to be separated. You see that in my fractal video. You cannot go from a big fractal. You cannot go from a big fractal to a small fractal. Okay, so but within a small fractals, price made was push, exhaustion, and price made push, exhaustion. This is correct because you can go from a small fractal to a big fractal. Then prices made a push. And what the next thing is what? At a break of trend line, which is, like I said, the trend line is the first element that lets us know that, okay, truly the bulls are done, now the bears are in, or the bears are done, the bulls are in. Afterwards, prices what? Leaves a reversal area. So what is the next thing? We wait for what? A trend line break. As soon as the trend line breaks, we are getting pumped. We are getting ready. We know that the bulls are done, the bears are coming in. The next thing we wait for is what? Wait for what? A break of structure. When prices comes here, break this horizontal support level here and break structure, we know that we are good to go for sell trade. We are going to sell pinpoints, put our stop loss at the eye, and sell down to that particular level. So let me zoom out, go to the daily, and see what our risk to reward could look like. Okay, so if we are selling at the break of structure at this level and we're putting our stop loss at the high, that could be around 277 pips stop loss, and our take profits could be here at around 685 pips. This trade could give us a very solid 1:3 risk reward trade, which is good. It's fantastic. Whatever you put on this trade, you're going to make 3 times of it. So this is how we trade, using what key reversal areas as one of our very, very solid elements in finding where prices could be reversing and could trigger a break of structure. So this is how we trade, guys. Want to learn more about how I use the simple knowledge of price action to make massive gains in the market? I have a mentorship program that you all can come in on board on, and I'm going to take you by the hand into being a profitable price action trader. I'm going to mentor you from where you are into being a profitable trader, making massive profits with price action in the market. I'm going to teach you several areas in the market that cuts across an extensive teaching of a proven multi-timeframe analysis to mastering key value zones in the market, to high probability trade exits, high probability trade entries, trading psychology, and a host of other areas that are going to help you see the markets differently and become profitable. I always tell my students that a lot of people, when you come into the market, you try to look for indicators and a lot of shortcuts, but eventually everybody still falls back to price action, as price action is the oldest form of technical trading and is the most reliable form of technical trading. So I want everyone to come on board, and I'm going to take you through a 2-month program of learning. Link in the description below.